All righty, everybody. Hopefully, everyone's having a good day. It is Tuesday, the 23rd, and I'm just kind of going to jump right into it because I'm already thinking. So, first thing we'll talk about is the trades that we took today. I took two trades today, one winning trade, one losing trade. The winning trade was, again, our normal setup that we trade. And then my second trade that I ended up losing was a little bit of a chase play. I'm not very happy with that one. And we'll look over both of them. So going into today, my bias was short, but since we did sweep this internal low, I wanted to see how we would react after sweeping this low. So notice on ES, after we swept that low, we started to, form kind of just chop at the lows. Notice we never got a market structure shift on a bigger time frame. Now, this would have been a cleaner market structure shift. On a smaller time frame, we got a market structure shift down here, but on a bigger time frame like the 5-minute market structure shift, we never really had anything. Looking at NQ, we were forming SMT as well, like this, and I wanted to see NQ continue higher. So once that we saw this low got swept on NQ, we were showing a lot of strength near the open. Going down to the 1 minute, we had a nice displacement up at the open. Beautiful. We had market structure shift right here. Again, big displacement, pull back into this fair value gap, targeting that previous high. I entered long, got a lot of chop, and then eventually ended up hitting that first price target. I took half off or 75% off, and then the rest ended up getting stopped at break even, or not at break even. I moved my stop to here. So I moved my stop up a little bit, and then the rest got stopped out right there once we broke through this high here. Now, this was a bad play on my part. I think the problem with me taking this trade is I was too heavily long biased at the time. Now, we did have an SMT on the bigger time frame. I wanted to see a breakout, but there was no reason for me to enter this long trade, especially after we have swept that previous high, right? Notice we can't seem to break higher. So this was me trying to predict a move to the upside, right? We keep projecting higher. I was trying to predict that we were going to continue up. I was not waiting for the actual confirmation. So this was a bad play on my part. Again, a quick stop on that, which I'm fine with, but this should not have been a trade in the first place looking back at this. So looking at the rest of the price action, I honestly would probably not have taken any other trade today. Actually, wait, let's see. Well, I want to check this low on NQ. Once we continued lower, there could have been a setup targeting the draw. Not really. Again, we've been having really bad action. The last 2 days have had really shit action. All right, let's go over to, okay, so today, why did we sell off, right? Well, number one, looking at a bigger time frame on both ES and NQ, more ES, we swept this high, coming back into this daily volume imbalance, SMT at the highs. This is now our market structure shift on a bigger time frame, right? On a 4 hour, if we're looking at this, this is our market structure shift. So now what I want to see is I want to see displacement back to discount for us to then go back lower. So 50% is here. We have this 4 hour fair value gap right here. Looking at the daily, keep in mind, we're also in a daily fair value gap. So we've swept that low. Forming SMT so far. So I'm bullish going, again, a lot of it depends on what happens in the overnight session tomorrow. Oh shit, wait, don't we have FOMC tomorrow, don't we? Fuck. Okay. And we have 10:05. We had news a lot this week so far. That's why we've been getting a little chop. So it's going to be interesting to see what happens tomorrow. I'll still wake up tomorrow. I'm still going to trade, but I do want to be cautious. Again, we have had news almost every day this week, and you can tell by the action that they're news days, right? Like, look at the open on ES, right? Again, on ES and NQ, we don't want to trade this. This is something we don't want to trade, right? I'm tired. Tired of news. Exactly. That's what I'm saying. I don't want to trade this. You don't want to trade this. this is not something that we should want to trade. So it's best to avoid news days in all. And I've been thinking for the future, and honestly, just for like the Discord in general, I think one of the things that we practice is building good habits. And I think one of the best habits you could have is just not trading news days. And I know it sucks because I love being on live every day with you guys, but I think in the future, after this week, I'm gonna start cutting down on certain trading days, especially bigger news days. Because going back in the journal, those days where those are harder days for me, especially a lot of it's on Mondays seem to be a worse day for me, and news days, right? So cutting those down is something that we have to have the discipline to do, right? Recognizing, those things, going back and, say fixing it. Okay, if I find, that I have, a way worse win rate on Mondays, then I'm just not going to trade Mondays. Or if I have, a way worse win rate on news days, I'm just not going to trade news days. So going into tomorrow, I'll still trade. I'm probably just going to trade light size. Yeah, so looking at ES, I do have a long bias right now. Now, this could change when I wake up because we might get the retracement in the overnight session. Now, one thing I do want to talk about that I didn't talk about today is why did we get chop at the open? There's a reason why we got chop at the open. And I forgot to talk about this, which is very important. Now, before the market even opened, we could expect chop. How is that? Because the draw was met before the open. The draw on liquidity was already met in pre-market, right? So looking at ES here, if we go to the 5-minute, right, we know the draw on liquidity was this low, right? We've been saying this for the start of the week. We knew the draw on liquidity was lower. Now that that's been hit, look, we ended up taking this out right before the open, right? So we end up taking this out right before the open. So when we open up, we have nowhere to really go, right? Because most of the time when we open, we're going to go towards whatever that draw is. Once we sweep the draw and it's already met pre-market, most of the time you can expect chop at the open, which is something I've been noticing and building off of and something that we want to note down. So write that down. If you have a journal or something, that's something that we want to take into account. If the draw on liquidity is met before the open, you can expect chop. Okay. If the draw on liquidity is met before the open, you can expect chop. Now, going into tomorrow, we've swept this low. Looking at NQ, we haven't swept this low. We've met discount on both, right? Looking at this, going to low, we've met discount. I'd want to see us now bounce back to the upsides to go back to discount before going back along, right? Because if we're looking at a bigger time frame, the 4-hour, right? This is what we look for our sell model, right? We external level swept, internal on a smaller time frame, big push down, no market structure shift yet. Now this is our market structure shift. Look at the displacement, beautiful displacement. Draw in our fib. We need to see at least 50%. So let me go down to a 1-hour. Do we have another fair value gap here? Look, boom, perfect. 1-hour fair value gap right here. Perfectly in 50%. This is where I'd want to see, if we come back up to, I'd want to see a rejection here and look for maybe a short opportunity to go back down. Now, if we end up chopping here in the overnight session like this, then I'd want to see us take a long near the open and seeing if we can catch that move back to discount before heading lower. So currently I'm bullish. Right now, I'd want to see a push in the overnight session going higher. The draw on liquidity, in my opinion, is this high. And I'd want to see, a continuation higher in the overnight session. Now, going into tomorrow, I would want to see us retrace to this fair value gap first and then go back lower. So currently I'm bullish. If we get to 50%, I'll be bearish for tomorrow. Does that make sense? Would you take a short at 11:16 PST on ES? Let's take a look. 11:16. Let's see. 11:16. Is it this right here? Oh, PST. So that's what is that for EST? Why am I blanking? Be like, okay. 3-hour diff, gotcha. So I'm guessing it would be this. That's the only one I see. Is it this right here? Yeah. Okay, let me see. Was that draw met already? Let me zoom out so I can get a bigger. Okay, so we're having strong push down. Drawn liquidity should become that previous low. You have, obvious pullback as well. You're in this 15-minute fair value gap. Not bad. Let me check. I want to check NQ at the time. Now, if NQ is forming SMT here, that would be a pretty nice entry. Now you've retraced. There was no SMT, but now it's not bad. It's not a bad setup at all. Again, good risk as well. You have, again, not the clearest market structure shift, really no displacement, but it's not a bad setup. Again, the reason why I would say it's not bad is because, again, the more that we build confidence with our strategy and the more that we can recognize, strong moves like this and catch these trend moves and going towards whatever that drawn liquidity is, if you can apply risk to any sort of PD array that we trade, then I'm going to say it's a good trade because you can apply risk to it, if that makes sense. So you have a conviction for this. Your conviction is you're in a downtrend. You've broken this level here on a bigger time frame. You're having strong selling pressure. You're overall bearish on a bigger time frame. The draw is probably lower since we haven't bounced yet. You have a pullback to a 15-minute fair value gap in a bearish trend. You have an internal sweep of liquidity. You have a break of structure internally, and then you have a fair value gap. All right, that's enough for me to say, okay, you know what? That's a decent trade, and you have good risk reward because your first price target is that low. So the first PT is a 3.78 RR ratio. So I'm happy with this, right? Now, this night might not be the perfect setup of what we normally trade, right? There's no liquidity sweep here, but we don't need that, right? That's why I always say the more that we trade and the more that we can build confidence with the draw, confidence on recognizing the market, and confidence in recognizing strength and weakness, we can use, fair value gaps, our model, order blocks, the drawn liquidity, all those things to build confident trades like this with good risk. So the biggest thing I want to see is, are you applying good risk? If you're applying good risk with what we use to trade, then I'm going to say it's a good trade. So for this is a good trade. It's this short. Yeah, that's not bad either. This is too loose of a stop, though, in my opinion. Put your stop at that wick right here, that previous wick. Especially when you're scalping the draw, you want to have very tight risk. There's an SMT too, right here. Gotcha. Okay. Yeah, not bad at all. Not bad at all. Yeah, there was an SMT. But again, the thing is I would have traded NQ here, right? If we look at this, NQ is weaker. Now, once you see the sell off, remember, when you have an SMT, you don't need a break of structure. All you need is, a fair value gap. So once this holds here on NQ, pull back to that fair value gap. That's what I'd short. My first price target would be that previous low, and then whatever that draw on liquidity is, which would be this low right here, and then letting that run, right? So this is what we talked about. Okay. You know what? I want to talk about this today. I want to go over a new model. With you guys. I went over it in the masterclass because we were talking yesterday. We went over my scalping model. So I've been building this for trend days and specifically like this, like days like this, where we can scalp the draw and liquidity when we have, a big move to the downside or a big move to the upside, and we have a trend on how to play the draw. So I'm going to show you guys. All right, everyone focus up. This is a really, I'm excited to share this with you guys. So this is my scalping model. First thing I want to see, strong volume. Some sort of, okay, so number one, strong volume. I want to see, a consistent trend move, right? So strong volume is number one. I want to see, how do I word this? Recognition of trend, right? We can recognize that we have strong volume and we could recognize we're in a downtrend, right? We're in a trend day, right? Trend day to the downside, and we have confidence on the draw. Next, right? Confidence on the draw. Next thing we need SMT in favor of the draw, or SMT in favor of trend. Fair value gap. Oh, wait. Retracement to discount of trend. Fair value gap for entry. Targeting recent high or low than the draw on liquidity. Okay. So this is the scalping model. We'll go over examples. So this is the requirements for if we're going to take a trade in a trend like this. This is for an A+. This is an A+ setup. We need strong volume, recognition of a trend, confidence in what we think the draw on liquidity is, SMT in favor of the trend, right? So if we're bearish, we want to see an SMT at the highs, retracement to discount of trend, fair value gap for entry, targeting recent high or low, then the draw on liquidity. Now, what's an example? This is a perfect example of ES and NQ. Number one, drawing in, we create a new low right here. Going from that previous high to the low, we've retraced back to discount. Also, if I was going to draw this recent high to this, we've also retraced back to discount. Okay, so that's number one. Strong volume. We can recognize we're in a strong trend to the downside, zooming out. If we look at this overall 1 hour on NQ, we know the draw on liquidity is most likely lower. Once we sweep this, have all this room to the downside, we know we're probably going to go retrace back to these fair value gaps. Oh, sorry. Going back to the 1 minute. Where did my little note go? There it is. Okay. Next, SMT in favor of trend. Okay. So we have everything we want so far, right? We have strong volume, recognition of a trend, confidence in the draw on both ES and NQ, right? Looking at ES, we still have not swept that previous low, right? We have that clear low right here. Then SMT in favor of the trend. Looking at ES, we sweep this high. Looking at NQ, we don't sweep the high, right? Higher high on ES, lower high on NQ. Next thing, fair value gap for entry. Boom, fair value gap right here. Pull back to fair value gap. Stop at the high. Targeting recent high or low. So your first target would be that recent low. And then whatever that external draw on liquidity is. That's an A+ scalping model. Yeah, I'll screenshot it. All right. Any questions on this model? This is honestly, I've been building a lot of confidence with this. Let's look for more examples. I'll show you any move, any trend day. We can find an example. I guarantee it. Let's do a little back testing session. Let's go to here. Whatever day this was, this was Friday 5th. Let's see if I can go back on the 1 minute to Friday the 5th. I don't know if I can, but I can't. We'll do maybe 2 minute. Can I go back? There we go. Okay. All right. 2 minute on NQ. Friday the 5th. All right. Looking at the trend, we break out. Clear, strong volume. Now notice We've swept this high, but if we want to see displacement, I'm not bearish until we show displacement, right? Because we can still go lower. Looking at a bigger time frame, this is my market structure shift, right? If I zoom back out on a 1 hour, we know we've swept this level here. If we break through this, I'm not expecting a big sell-off, right? This is our market structure shift because we've swept that external level. So that's giving me more confidence this could be a trend move, right? Now, if we can continue higher, the drawn liquidity then becomes at whatever that previous high is, right? So going back to the 2 minute, scroll back over. Okay. Clear trend move. All right. First thing. Want to look. Is there any SMT formed? Number one. It's kind of hard to see on the 2 minute, but we'll start at the open. Or once we get clear direction, right? Clear direction, upside. Yeah, it's kind of harder to see on the 2 minute. Retracement, still nothing. Don't really like anything here. Okay, we kind of have this. This is kind of something. Now, again, I can't zoom into the... Actually, no, I wouldn't take that. That's equal lows. Zooming out. Still, is there anything? Did we take this? What low is this? There we go. Okay. Here we go. ES. Sweeps the low. NQ. Higher low. Not only are we forming SMT here, and we swept the low on ES, but NQ also swept these lows, right? All this accumulation here, all these lows, you know, push down, bounce up, push down, bounce up, push down, bounce up. We sweep this, still forming SMT, right? Still forming SMT. Which one would I take? Whatever the stronger one is. Looking at NQ, NQ is obviously stronger because it's a higher low, right? We have a strong trend move. Notice all this chop going on. Now notice we're still having decent volume, but when we're slowly pulling back, this is showing me we're most likely going to get an expansion move higher. So we have everything we want so far. Also, notice taking discount of the range. Go to the recent high, whatever that low is. We've reached discount of the range. So once we get that bounce, have that SMT formed, look for a fair value gap, whatever that first one is. This is your entry. Targeting whatever that previous high is, which is the high day. Stop at whatever the low is or whatever that. And then leave the rest to whatever, the next draw is. You could leave it to the weekly opening gap, whatever it is at the time. There you go. Another example. Where would your SL be in that situation? SL for me, I would put it at just the bottom of the candle. I wouldn't give it all the way to the wick. I'd give it just here because I don't want to see us. If again, we should hold this fair value gap. Liquidity sweep inside SMT higher in confluence. I'm not sure how common that is. That's the thing. It doesn't have to be common. When you see it, you need, okay. The way that I like to think about it is there's some times where you just need a win. Let's say you're in drawdown. You need something you can trust. This is a model that you can learn how to trust. Because most of the time when you end up seeing this, this is going to be, a very high quality setup that you can trust. That's a tight stop, though? I don't think so. Again, you'll know if you're right, or you'll know quickly if you're wrong. That's how it should be. You should not enter and then have to second guess everything you do, right? If I'm wrong, I want to know pretty quickly I'm wrong. So I don't want to give it until this, because if I'm right, we should literally touch in this and then go to that buy side, right? If I'm wrong, then we're going to, go back through this and then, probably go lower and then maybe bounce, right? So if I get that entry, I'm going to keep it tight, because if I enter, it better, that's the time where I enter where it should be. I have confidence for the setup. I have everything I need. I can set my stop tight, because after I enter, it should go right to that buy side level. In every example that we've seen so far, with everything that sets up perfectly, you don't have that much drawdown. It's an enter and you get zero, not a lot of drawdown for that trade. Any questions? Did it retrace the discount? Yep. So go from the high, whatever that recent low is. So this, right? You take whatever the move is, the expansion move of that specific, area, and then you can see we've retraced a discount here, right? Same as ES. Go from whatever low that was created from the high to the low, retrace discount. The expansion move after we take a buy side. What do you mean? Let's see if there was any more setups. There's another one here. Boom. Perfect. Look. Another one. Trend move. SMT. NQ takes out the low. ES. Forming SMT higher. Retrace a discount. Now, I'm hoping on a smaller time frame there's a fair value gap, but since I can't zoom into a 1 minute. But this is just another example to, I mean, actually, technically, fuck it. I would say this. I would count this. Targeting that weekly opening gap, stop would be at that low. I feel like people are going to use this strategy and rush into a losing day. What do you mean? What would be market structure shift on NQ example? There doesn't need to be market structure shift. There doesn't need to be it. If you have an SMT, you don't need market structure. All you need is fair value gap. So buys for tomorrow, wanting to see retrace overnight to discount, look for rejection from fair value gap at 50%, look for shorts, and if we consolidate at the lows overnight, we would want to look for long targeting that 50%. Yep, spot on. That's it. I took a short at 1343. Can you read it? Yeah, let's check it. $13.43. I personally probably wouldn't have taken. Actually, wait. Yeah, I probably wouldn't have taken this trade. And the reason is because we've swept this level. This could now be internal swept, right? So again, that's why after we sweep the low, I have to see my scalping model play out for me to take a continuation. That's just how it is. For me to have confidence trading the continuation to the downside, I have to get the model. Because you can enter here, you could enter this long. This could be internal being swept, market structure shift, pull back to this order block, and then this just flies to that recent high first, and then that's market structure, right? So a lot of the times when we don't get days like this, again, you got to recognize, look at this day. Look at the 1 hour. We've had just big sell-off. Again, most days you're not going to get that, right? You're not going to get that big move to the downside. So you have to recognize, right, building good habits, bad habits. So that specific trade, probably not the highest quality setup. I'd say if anything, just add this to your arsenal. It doesn't involve changing your strat. It's the same model, use a tad differently, so you aren't bogging your mind down in terms of throw it in your notes and see how. Yep, exactly. And you'll get to a point where you'll see these things, right? Like I created that model because I see it, right? And then I just wanted a name for it, and I wanted to, have something that you guys can look for as well, and you know what to look for, right? That's something that a lot of traders can't do, and that honestly is a test of experience. Can somebody explain? Like explain something to a 5-year-old that they can understand. That's a test to see how knowledgeable somebody is. Because it's in my brain. I know what to look for, but can I explain it? So that's the biggest thing is being able, I can write that down, let you guys know exactly what we're looking for. So when I see it live, I can say, yo, this is our scalping model. How big of a time frame would you recommend staying on for the scalp strat? I like it on smaller time frames, but you can use it on anything. I'd keep it to 1 to 5 minute though. 1 to 5 minute. Also, how confident are you in entering off an SMT like the one ES just then? V's letting the SMT play out, entering off retrace, trying to add my playbook. I mean, that's pretty much what the scalping model is. You have an SMT, pull back to discount with a fair value gap targeting the low. It's pretty much the same thing. Want to your confidence? Yeah, I'm pretty confident on that. If you get that, if you get the right setup. You have your trading model written out? Yes. Well, I just took a screenshot. I'll put it in the chat later. Do you always look for 1 to 3 RR, or do you make some exceptions, a scalp 1 to 3 at least? So what I like to do is I take normally 50% off at least 1.5 to 2. At least most of the time I want to be at least 2. So I'll take half off at 2, right? So let's say, let's say I take this short here, pull back to fair value gap. I take a short, stop here. My first price target on this is going to be whatever that previous low is, right? So low here, that means my first PT half off would be 2.5, right? That's beautiful. That's what I want to see. Half off 2.5, let the rest go, whatever the draw is, scale out along the way, right? Scale another, 10%, another 10%, another 10%, and then, yeah, and then trail, whatever. Yeah, this is the model. Do we look for this scout model after taking the draw, or could it be anywhere in a range to take the draw? I understand it's a trend day better. I like it trend day, but you could take it towards the draw. You definitely could take it towards the draw. But again, everything else has to line up. Do you have strong volume? Do you have a clear draw and liquidity? Those things also have to line up, though. Like, for example, let's look at this, right? Let's see if we got a trade up here, right? Up here targeting that low. Let's see if there was a setup. Because we have clear draw and liquidity. We're clearly selling off. Let's see. Now, this is overnight action, but let's still see if we see it. And we'll see how many times it actually was given. So let's see. High created, same high. High created. There we go. Okay, boom. First one I see. SMT here. SMT here. Now, clear draw and liquidity. Trend move, looking at the 1 minute. Clear move to the downside. SMT. Looking at the trend. Pull back to discount. We also have, I'm guessing on bigger time frame, we kind of, fair value gaps. So again, it's low volume, so you can't really tell. And then targeting whatever that draw is. Again, there's no fair value gap because the volume's so slow. I mean, you have fair value gaps, but they were never met because of the volume. But you can see just the SMT, just retrace to discount, just having clear draw and liquidity is really all you need. And then also more conviction here because you have equal lows on ES. But your entry here would be this fair value gap. Then half off would be 1.4. Again, but low volume, so kind of hard to tell. We'll keep looking, see if there's anything else. All right, there is another one. SMT. Obviously going to take the weaker one, right? Pull back to discount, right? Go from the high to the low. We pulled back to discount, and we're in OTE, optimal trade entry area, right? Which is even better. Move down, fair value gap. Take the short. Stop at, I'll probably just put it here. You could, depends. And then target would be that low first. And then this would be, half or, 75% off. I'd probably do 75% off here and then just leave the rest. No, OTE is different. So there's 50%. So on my fib, there's a lot of different things. So we haven't really gone over, we haven't got, The only thing you need to pay attention to is OTE is 7.9.705, and then this is 50%, which is discount. Now, the rest of all this is a separate ICT concept that we've talked about a little bit, but we'll talk about more in the future. It's not, I don't use it that much. It's not like a super important thing, so don't worry about it. But all right, that's another setup. So literally every single time that we've seen it so far, it's been a winner. So let's keep looking, see if there's anything else. We get high. That's the same high. That's the same low. Nothing there. Oh, did that sweep that high? What about this high? There we go. SMT. Obviously taking the weaker one. Right? NQ, the weaker one, clear draw. This move to the discount, fair value gap. Tapped in right here on this little wick right here. Stop at the high of the wick. Target being that recent low. Boom. Let's keep going. Did we get an S&P today? I don't think we did. Yeah, we didn't. Well, that's pretty much it. But yeah, you can see how many times it's offered throughout a move to the draw. How does it look like on higher time frame? Higher time frame. So if we're looking at a 15-minute, looks like this, right? We know the draw on liquidity is lower. So it's just right here. We have this big selling move down. We're just catching the trend move. Continuation, again, leaving runners to, hold numbers or lows. So if we had done that trade, I'd leave, take off some here, take off some at this low, and then leave that extra, contract to that external sell side liquidity, right? Yeah. Anybody have any questions? Please post this one. I have to go. I got you, brother. Now we have an incredibly confident strategy for regular days and increasingly confident strategy for strong trend days. It's going to be unstoppable. That's what I'm saying, bro. Again, we are always looking for new ways, right? Now, it's not fixing what's broken. It's adapting, right? We are using what we know in coming up. This is what mastery looks like. This is mastery, right? I have noticed, again, the people who have been here for some time, when we get trend days, I always say, I don't like trading trend days because I haven't built a confident setup with it yet. Now I have something that I've consistently seen repeat itself over and over again when we have a clear draw on liquidity and we have a clear, strong move, right? So now I can look for it, write it down, say what I want, and I can back test it, right? And see that it's very, very profitable. So now I have something to trade on trend days. How long have you been backtesting strat? A couple months now, because it's every single day I'm backtesting this strat, right? Every single day I'm backtesting it, because when I see it, I recognize that it's the exact same thing that I've seen multiple times over and over again. So that's why I said I went over it first with the masterclass, and then I want to do it with you guys as well, because I think I'm going to make a post on this actually, because I haven't really seen anybody else have this model, or like at least the way I like it. So I might make a video on this specific model. When you say draw on liquidity, do you mean like where the price is already heading? Exactly. Well, where price is already heading and to where, structure wise, right? So for example, looking at the 1 hour here, right? We have a clear draw on liquidity being this low here on both ES and NQ, right? NQ draw on liquidity is this. Notice ES comes up, or NQ comes up, breaks that high. ES doesn't break that high, forming SMT on a bigger time frame, starting to sell off. We've swept that external level, right? We've swept these external highs. Market structure shift. We're still rejecting this fair value gap. We haven't had a candle close above it. starting to sell back off. The draw on liquidity easily becomes this low now, right? That's the confidence. So once we have that higher time frame confidence of, the draw being lower, we can then look for that model to then scalp towards whatever the draw on liquidity is. Does that make sense? All right. I think that's all that I have for you guys tonight. And does anybody have any last questions? I just want to thank you for all the knowledge that you share. I've learned so much more about trading ever since I joined your Discord. You've taught me a more advanced version of my strat, and then I plays it caught most of the move. Nice. Much love, bro. Keep improving, brother. Of course, Drew. Like, thank you so much, dude. Of course, brother. That's what I'm here for. I love it. I love doing this shit. Beast as mentor. Much love. Much love. This was a good one. I'm gonna post this one. This was good. This was a good session. Catch you in the morning. Yes, sir. All right, guys. Enjoy the rest of your night. I will see you all tomorrow morning. Peace.